Happy Friday, traders. Well, we are getting some decent market moves to end the week. So what is moving markets? Well, the Fed meeting certainly is moving markets. So we had Kevin Warsh as the new Fed chair's first Fed meeting 24 hours ago, a day ago, and there were a couple of surprises there. Look, the first surprise is that Kevin Warsh wants to get rid of the Fed's forward guidance. So basically, guiding the market or telling the market where the Fed expects monetary policy and interest rates to be in the future. So what the Fed wants to do is basically let the market, trade economic data on its merits. Instead of basically trading what they think the Fed is going to do in the future. So look, that is a big change that the market now is going to be flying a little bit blind when it comes to Fed policy and basically, pricing markets, on economic data's merits. So look, I think that is a positive, thing from a new initiative for the Fed moving forward, and that's a huge change. But the big change, and the one that really is moving markets, is that Fed Warsh came in and basically said that the Fed has not achieved its inflation mandate in the last 5 years, and that was not good enough. So the inflation mandate for the Fed is getting inflation to 2%. And so he basically said that the Fed will in capital letters achieve its inflation mandate. That is super hawkish. So basically what it's saying, Kevin Warsh, is that he will raise rates and he'll do whatever it takes to get inflation back to 2%. Currently we've got headline inflation at 4.2% last month's inflation numbers. So that is a long way from 2%. So the market reacted immediately to those hawkish, basically comments in that now pricing in Fed rate hikes. So we're looking at potentially the first rate hike from the Fed in September. Market's looking at September and December. So 25 basis points, so 50 basis points higher by the end of the year, so taking the Fed funds rate back to 4%. But we do have a Fed meeting that the next one is 6 weeks away. And look, I'd suggest the way that Kevin Warsh was talking that that meeting is live, and it would not surprise me if we get the first Fed rate hike in 6 weeks. So look, that hawkishness is what really is driving some of these markets at the moment. So the bond market reacted immediately. So we saw US 2 yields, and that's what tracks, I guess, in the bond market, the Fed funds rate the closest. Fed funds rate at the moment is 3.5%. Those US 2 yields spiked up, and they're currently pushing up towards 4.2%. So currency markets and US dollar follows what happens to US yields. US yields go up, especially those short-term yields. So now we've got the US dollar in the box seat, and the US dollar is absolutely ripping faces off at the moment. So I would suggest I would not be fading this move in the US dollar. I would not be selling US dollars against anything. The dollar yen is probably the currency that has seen the biggest US dollar buying. Just before the BOJ, dollar yen went down towards 160. That pushed up towards almost 162 overnight before we did see some selling interest come in. But these are huge moves. Dollar yen's back at 40-year highs. Obviously, there is an intervention risk potentially at some stage. It could come at any time. But in any case, market is buying dollars. Euro's been smashed below 115. Aussie back down towards 70 cents. So that's where we're seeing some of the biggest moves so far post Fed meeting is in the currency space, which really has been quiet in the last couple of months. But potentially with what's happening now with the Fed, hawkish again. We may see this directionally start trading again, and DXY, pop back above 100 and start trending higher from there. So that's one of the biggest moves we're seeing in the markets post-Fed. Precious metals as well, big moves there. Precious metals, commodities are priced inversely to the US dollar. So when you get a stronger US dollar, the commodities are lower. Also, precious metals, they do not like yields going higher, especially gold, because it yields nothing. Gold pre-Fed was up almost at 43.80, pushing 4,400. It's been smashed down $200 and currently trading just below 4,200. Silver was trading above $70 pre-Fed, back down now to $65. Again, look, obviously gold and silver are volatile. They do have big daily ranges. So yes, obviously we can see retracements in those, but I'd be selling rallies in those precious metals because certainly that stronger US dollar and higher yields, rate hikes is going to weigh on them. So I'd be looking further out in the short term, medium term, that we are going to be seeing further weakness there. Look, the other thing that's been moving markets is that we did get the memorandum of understanding signed between the US and Iran. So yes, crude oil has still been depressed and weighed down by that. We are trading around that $75 mark, but we are getting towards levels that I'd imagine are going to be solid support down around that $70 mark. I would not be fresh short anywhere down there because we're not going to see crude supply back anywhere near where it was pre-war for an extended period of time. So there's got to be some sort of crude premium moving forward. But equity markets obviously reacted positively, even though this has been well flagged and it's rallied so many times on this peace talk and agreements, etc. But NASDAQ last night up 2.5%, almost back towards record highs, stone's throw from that, and S&P traveling above 7,500. So at the moment, even with what's happened with the Fed and what's happened with yields in the currency market, the strong link in market has been the equity space, US equities. Obviously, what's happening with the tech shares, AI narrative. It's been super hard to get these lower, even when they have had mini retracements. They've been bought straight back up. So it's been very hard for bears to trade. And at the moment, yes, I'd say that there probably isn't a huge trade on the downside yet. So again, fading the US equities really hasn't paid dividends. But if we continue to see yields higher, US dollar also ripping, I'd imagine at some stage you'd think that the equity markets would start looking at these other markets and the rally top side might start to fade. Anyway, going into the weekend, there really isn't any big risk events, so I'd imagine we're going to continue trading the themes that we've just talked about. But just lastly, yes, Bitcoin is struggling. It's trading sub 63,000. Obviously, that 60,000 and below there at 59 is the key support levels. We've bounced off it a couple of times. The sharks are smelling blood when it comes to Michael Saylor and strategy and whether or not he can actually pay all his commitments. And if he has to start selling Bitcoin, obviously we could see it sharply lower. So certainly would not be trying to buy these dips in Bitcoin at the moment because yes, it does look as if there are some significant issues there with Michael Saylor and his company strategy and what happens next there. But anyway, have a great weekend and we will check back in with you next week.